20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Former CIA officer Jason Hansen here. As someone who's dedicated my life to protecting people, I know the importance of guarding what matters most. Right now, with global instability and the dollar's declining value, that means securing your financial assets with gold. For me, I trust Advantage Gold with my own investments. Give them a call at 800-900-8000 for a 100% free gold guide. Again, call Advantage Gold now at 800-900-8000 today.
Paid for by Advantage Gold. Performance may vary. Past performance is not indicative of future results. Always consult your financial and tax professional.
Are you having trouble hearing? Hearing loss can devastate the quality of your life. Now, there's an affordable fix for you or your loved one. Rated in the best hearing aids of 2024 by USA Today, Audion Hearing has the highest quality hearing aids at the lowest prices, just $189.
I actually like them better than my old $5,000 hearing aids.
I could not believe how my hearing and life changed.
Join over 500,000 happy customers by going to audionhearing.com. That's AUDIEN hearing.com.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 7 Common Financial Frauds and Scams. Mike, the big one that people tend to focus on, and it's an important one, is identity theft. Let's first define what identity theft is.
Yeah, well, I think it's also fairly misunderstood because some people have a vision of, a big criminal ripping off your identity, and it's not usually done that way. But identity theft is using someone's social security number or, identifying their bank account numbers to be able to imitate them and therefore gain access to their funds in some way, shape, or form.
And there are some things that people can start to do in order to potentially protect themselves against identity theft, but it's a hard one because there's so many different potential entry points.
Well, there's been so many data breaches too, right? If you work for the federal government, your information's been breached. If you have ever had anything through Experian, you've been breached at some point in the past. And so if somebody really wants to buy your social security number, it's unfortunately not terribly difficult to do. But obviously storing documents in a safe place so they can't be misplaced, being careful and not using things like public Wi-Fi is a big one to avoid using. And then skimming credit card information is very common these days. And so to the extent you're able to not swipe a credit card and instead use the pay to touch, that can help things along when it comes to avoiding this.
Our guide is titled The 7 Common Financial Frauds and Scams, and the way to request it is by calling 800-393-4001. Again, it's The 7 Common Financial Frauds and Scams, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, and as we kick things off today, we got some additional economic data in the form of retail sales data for the month of December. We also did get some jobless claims data. Mike, which one of those do you want to start with?
I think the retail sales number, if I recall, there was some big holiday going on in December, so that seems like an important one to cover.
Yes, the Festivus shopping season was, obviously quite busy this year. And what we saw, retail sales for the month of December, up 0.4% month over month. The estimate was between 0.5 and 0.6, so you missed on the headline there. Excluding autos came in at 0.4, which was right in line with expectations. So this kind of got back to what we had said in December about the November data, where, remember, there's this big jump in auto sales, and we're like, hey, this is probably due to people trying to front-run tariffs because auto sales aren't going to increase this quickly, each year for each month forever. They just they can't do that. And sure enough, that's kind of what we saw here, where there was a slowdown month over month in the pace of auto sales growth. It still is growing, but just not as quickly as it had the prior month. And so as a result, you came in with a more muted number on this side of things. And so overall, a pretty healthy retail sales number. There's nothing that I think is particularly concerning in here. The only thing that I think you could designate as concerning, in my opinion, two small things. One, building material and garden supply stores, so basically your Home Depots, Lowe's, and things like that. 2% monthly decline, and this comes on the back of, obviously, look, you've had a rise in interest rates, so you wonder, is that affecting, potential renovations and construction? But the other thing that's a little bit strange there is, look, in September and October, you had two big hurricanes that went through the southeastern part of the United States. And 2 months after, you're now already seeing a decline in building material sales. Like, that's not really a great sign, given that you're probably getting a tailwind in the southern part of the country from rebuilding and stuff like that that's taking place. I know it takes time, obviously, for, if you have to demolish a home, you don't go and buy all the stuff right away. But, hey, if you're not demolishing a whole home but just repairing, drywall or this and that, okay, like you want to get into that stuff within a month or two. And so that number's one that I look at and say, yeah, you could have, a real drag from housing if rates stay high.
Sure.
The other piece is, hey, this is all still pre-potential tariff, and so a lot of these categories still could be boosted by people or companies trying to front-run tariffs that may be in place within the next week or so. We don't know the details yet. And so how do we see this evolve as we get into the January, February, March data? I think is an open question, but one that is a question, not something where you're like, oh, this is going to be bad. It's more, hey, what does this mean?
Right. Yeah, it does need to continue. Maybe there is weather patterns. Maybe there's other stuff going on in December that dragged that down. Food services and drinking places were the other category that was negative, along with health and personal care. So, again, there could be seasonality to all this. The other number that was revised upward, on the other hand, the November data bumped up. I don't remember where it came out initially, but bumped up to a 0.8% total growth number. So, for the year, retail sales 2024 compared to 2023 came in at a solid clip of 3%, but keep in mind, these aren't inflation adjusted, correct? So we've got inflation running close to that, retail sales up 3% for the year. Not a massive increase in
Mike,
volume.
Where do you have the
stuff.
3% number? I'm seeing 3.9.
Are you seeing 3.9?
I'm seeing 3.9 year over year.
Yeah, I'll double check my data. I saw total retail and food services total percentage change. Oh, sorry, I'm looking at the 2023 percentage change, not the 2024, I think. But in either case, 3.9% bump, that is considerably better than 3. What would you have full year inflation running for 2024?
CPI had it at, you're talking headline inflation.
Yeah.
We came in at 2.9, I believe it is.
Right. So
let me check. I want to make sure I give you the right number. Yeah, 2.9.
Pretty solid bump up in overall total sales for the year of a good 1% once adjusted for inflation.
So some good numbers there. Again, I think these numbers are fine. They don't indicate concern either way on me in terms of the economy slowing too much nor overheating. I think that this is just fine. Like it's lovely. If we take a look at what we saw for the jobless claims numbers, initial jobless claims came in at 217,000 for the week. Slight bump up from 203,000, but that 203 is probably unsustainably low. Excuse me, I had to sneeze. The continuing jobless claims numbers coming in with a slight dip of about 8,000 down to 1.859 million. But the interesting thing is, year over year, we are still seeing a modest acceleration in continuing claims. So even though they dropped, in the short term, the year over year numbers are still higher than what we would like to see, because you don't want to see claims increasing year over year. That indicates more people on unemployment, obviously. So, again, nothing that's hugely concerning here. I think this is absolutely fine. It's something where you look at it and you say, yeah, there's some stuff around the edges that you'd like to clean up. But overall, I don't think there's anything in this data that suggests any meaningful problem there.
No, it feeds into a narrative that we've talked at length about, though, which is a job market that has become a bit stagnant, especially for those in certain industries that were unable to find work over the course of 2024. That portion of people that are unemployed for over 6 months continues to bump up and not showing its way in the unemployment rate, not mass layoffs that we're hearing about, but some hesitance, at least there was some hesitance on part of employers of dramatically adding headcount, especially in the second half of last year. We'll see that could shift in 2025, new administration, new sets of rules. Who knows? We will have to monitor it.
So this all dovetails into the fact that, hey, in 4 days, new president taking office in the White House. Donald Trump going to have his second term in office. And clearly, when we look at the proposals that have been out there from the Trump campaign, soon to be the Trump administration, there are a whole bunch of potential big changes that could be happening, especially as it relates to the prices that Americans pay for different goods because of the potential imposition of tariffs in any number of ways. And so I think this is going to be one of the questions this year, which is, hey, again, two very simple questions. Number one, what tariffs actually get implemented? Number two, what impact do they actually have on prices then?
Mm-hmm. Yeah.
Is that I don't know that we can say anything much more than that, but this is potentially going to be something that is a real driver of inflationary concerns. The labor market no longer really is. It's not something where, at least as far as I can tell, you're not looking at the labor market now being like, gee, that's potentially driving inflation. We're basically back to pre-pandemic labor market levels of activity. And so I think as such, you kind of look at the picture and you say, yeah, there still is some background inflation that's higher than you'd like to see, but the question for this year is going to be, do you see any meaningful shift up or down in that level of inflation, and how much of it is due to policy shifts from the incoming administration?
Right. Yeah, in the short term, the only thing that could be that driver of higher inflation would be the tariffs, as far as I'm concerned. You could, over the course of the next few years, see some effect of lower taxes benefiting some Americans, putting extra cash in their pocket and increasing their willingness to spend. I wouldn't deny that, but you won't see that show up in all likelihood very quickly. And so if we start to see tariffs implemented, it is a all-important question, right? Do they go with the gradual ratcheted up method, in which case it takes a while for them to show up in pricing, or is it a flat big bump on every imported good coming into the United States? As it sounds like I'm being dramatic, but that was absolutely mentioned on the campaign trail, and we don't honestly know which direction it might go over the course of the next few months, but we will soon.
Let's take a quick break here. When we come back, we'll talk about what we're seeing from big bank earnings. We've continued to get more and more reporting, and now I think we have enough that we can, kind of give a fairly conclusive report on the sector, at least for, those of you who are not, banking industry analysts. If you are, you probably know way more than we do. So, banking industry analysts, feel free to tune out during the next segment. But for everyone else, we'll tell you what banks are saying about the state of the U.S. economy.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. services. Preparing for long-term healthcare costs is a critical piece of your retirement plan. According to Genworth, a nursing home stay in New England might reach nearly $200,000 a year in the next 10 years. So if you aren't ready, your savings could be at risk. Cushing & Dolan are experts in elder law, and if you haven't done your planning yet or need a second look at your existing plan, call them today at 866-848-5699. Ask for their new free guide called Long-Term Care Planning for Procrastinators. The guide will help educate you on how to protect your assets from these high costs so you can enjoy your retirement years. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, Mike, so we've been through the bank earnings cycle at this point, and or at least we're mostly through. There's still a couple more to come, I think, but we've been through the vast majority. JP Morgan, Wells Fargo, Goldman Sachs, and Citi reporting yesterday. Today we had Bank of America, Morgan Stanley, PNC, U.S. Bancorp out there. And this piece from the New York Times, the headline is it's a good/great time to be a big bank. And then you kind of go through it, and it basically says, look, the banks are not seeing any major signs of concern that are out there. And I think that's true, but the general tenor of what I have gotten is, hey, we're not seeing any deterioration in our loan portfolios. We're not seeing any major cause for concern. We think that deal-making activity may pick up in the next year and help investment banking. Mm-hmm. But loan growth is running very low single digits, and so we're not really growing our business that quickly. And so I think that right now my message on the banks is they kind of look like the job market to a certain extent, where you're not really seeing any huge problems, but everything's just kind of stagnant. It's like it's fine, but you're not really doing much in either direction. Is that fair, or is that too pessimistic in my opinion?
Well, I think that might be a fair assessment of a smaller bank that derives the majority of its revenue from loan growth, but remember that that's not JP Morgan, that's not Goldman Sachs. These companies, the reasons they are benefiting so much has a lot to do with things like portfolio loans, where they are seeing some activity. Like investment banking revenue, Goldman Sachs in particular talked about the massive growth they've seen in loan generation for smaller, less creditworthy companies. The S&P Global Banks Index, it's up about 6.25% so far in January to kick off the year as these banks have been reporting earnings. And so I would agree with you, right? If you're a smaller regional bank that makes a lot of their money on issuing car loans and mortgages, doesn't look great out there. If you're a giant investment bank with your own investment management arm, trading arm, and you derive a lot of income from lining up loans like Goldman Sachs, then you're in a pretty good spot. And that leads me to a question, Chuck, for you. I mean, Goldman Sachs, as quoted in this article, saw fourth quarter profit of $4 billion and $14 billion for 2024. particularly seeing success connecting risky companies looking for money to clients willing to lend it. That speaks to me to be private credit. And I feel like I've been reading a lot here and there about private credit and just the state of it, which is probably not something that everyone has right front and center in their investment portfolios. But what are you hearing about the private credit space? Because it has been a massive growth engine for large banks and other financial institutions over the last decade.
It hasn't, and really it's the other financial institutions, because banks actually in some cases are the ones that are being hurt by this, because lenders are going outside of the traditional banking system, or rather borrowers are going outside the traditional banking system.
Right. Goldman might line up the loan, but they don't actually issue it.
Yeah, let's talk about what private credit is. So in the past, a couple different things. Let's say that you're a small company and you need to borrow $10 million, which you might be like, Chuck, that's a huge amount of money. It is for a person, but for a company that might be, still a very small company. I mean, Microsoft borrows $10 billion. This is, again, a fraction of the size of it. So you might say, okay, I want $10 million. And historically, you'd go to your, bank that you had a relationship with. They'd underwrite the loan and so on and so forth. The other thing that you would typically see is, okay, we're a little bit bigger and we need, $100 million. Hey, we're going to do, a bond offering through a bank that underwrites it, and then we have bonds that are out there that get, traded in the bond market. What has happened instead in recent years is the emergence of what is called private credit, where it's not going through the standard loan underwriting process through a bank or other, or that type of financial institution. Instead, what you are seeing is, rather than a company placing a bond, you simply have an entity that comes by and says, hey, we've got a bunch of money and we will lend it to you. It's not a bank that's doing this. It's specifically like a private credit fund. And a couple things end up happening as a result of this. One, it depends on the specific loans and things like that, but in general, you might find that you're able to get better terms through doing this than you could through the bond market. So that's what's attracted, potential borrowers to it. But also, for those who are lending, what they found is, hey, we can raise money from a bunch of wealthy people and, effectively try to deliver them yields that are higher than the bond market still. And in doing so, it's kind of a win-win situation, is the way that it is generally discussed. Now, a couple things end up happening as a result of this. The first is that many of the loans that are underwritten this way through the private credit market, they end up being held just by that one entity. So let's say that you're, a $2 billion private credit fund and you lend someone $100 million. Normally that would trade out on the bond market. It would be something that's just out there and floating around. Today it's just held by one company. On one hand, that's good, because if there are problems with the company, you can say, okay, we need to renegotiate, and there's someone who's holding, all of our loan, and we can renegotiate with them instead of having to negotiate with a bunch of different creditors. Great. Like, it could be easier, and you could get, again, better resolution to what's going on. The downside to that is, let's say that you are an investor in that private credit fund. You have no idea that there's any problem, because the bond is not trading freely on the bond market, so it's much more opaque.
I would assume none of the credit rating agencies are putting any sort of judgment on the status of these bonds.
No, they're not rating this stuff because it's not being traded. They don't right. need to in order to underwrite it. So I think what we end up with is a system that, to this point, if we're being honest, has delivered really good returns to investors in general, and has provided the capital that's needed for businesses that need them. The downside is that we don't have as much information about what's going on with these loans, because they're all, privately held, and we don't even know how big this overall market is. The estimates that I've seen are anywhere from $1 trillion to like $6 or $7 trillion. So there's a wide range of, how much is even in here, because we don't really know. And the other piece on this is, if you look at who's the most yield hungry right now, it is insurance companies. And the reason why is that insurance companies, if you think about how they work, we all pay money into an insurance company, and they know they have to pay out claims later on. And so what they want is something that is relatively stable but pays interest, which is why historically they've bought bonds in insurance company general accounts. As insurance companies have, had to struggle in recent years with profitability, what you've ended up with is they've been trying to reach for yield through private credit instruments and things like that. And so one of the big risks that is out there in the financial system, in my opinion, is if the private credit market starts to blow up at some point, insurance companies are right on the front lines of, who's most heavily invested in these in a lot of cases. And given the potential for, high claims, see California right now, it is a significant risk that you have problems in the insurance market related to a combination of private credit and higher claims in the future.
It's again, it's different, but it rhymes with, you think about the movies you've watched about the Great Financial Crisis and banks saying they don't really understand the risk that they own with, mortgage loans and
MBSs and stuff.
It's different, but it rhymes with it.
So this is what's, again, just something else that's out there. A little bit, I know we get a little dense there, but we'll pull it back. We got Wall Street Watch coming right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Following yesterday's big rally driven by a CPI inflation reading that met expectations and strong bank earnings, markets today are dipping into negative territory. This morning, investors are digesting the December retail sales report, where retail sales climbed 0.4%, short of estimates of 0.6%. Right now, the Dow is off by 71 points. S&P 500 is down 0.1% or 6 points. And the NASDAQ down by 0.3% or 57 points. Russell 2000 is off by about 0.25%. 10-year Treasury yield is down by 1 basis point at 4.64%. And crude oil down by 1% today, trading just above $79 a barrel. More bank earnings streaming in this morning from Bank of America and Morgan Stanley, both beating fourth quarter expectations, similar to other banks that reported yesterday. Morgan Stanley up by 2.5%, while Bank of America shares are flat. Meanwhile, United Health reported weaker than expected fourth quarter revenue. However, earnings did beat street forecast. That stock down by 4%. Elsewhere, Target shares down by over 3% after the retailer hiked its fourth quarter sales guidance and also expects comparable store sales to increase 1.5%. And Taiwan Semiconductor posted a record quarter driven by AI and said it expected growth to continue. That stock up by 5%, while several other chip makers are also seeing gains in reaction to the company's results. I'm Tucker Silva, and that's Wall Street Watch.
Mike, let's talk a little bit about the U.S. housing market. Piece in the Wall Street Journal. It's titled, Wall Street Thinks U.S. Homes Are Overpriced. The subheader, housing could be overvalued by anywhere from 10 to 35% based on how investors are acting. What exactly are they basing those headlines on here?
Yeah, so there's a couple companies that they looked at here. Invitation Homes, this is a publicly traded company, as well as American Homes for Rent. And what they found is, look, if you take a look at the value of their properties on the open market and what similar homes are going for today compared to their stock price, they find a discount between 20 to 35% on public markets. And so that's what they are insinuating here, is that, hey, investors seem to be rather pessimistic about, I guess, the future value of these homes, or where they see the market going compared to what homes are selling for on the open market today in those same markets.
Other data that I think you can look at on this, and we'll get into whether or not this is an appropriate way to figure out what these assets are actually valued at. I'll quote here: Wall Street landlords are notably quiet at the moment. In the third quarter of 2024, large institutional investors that already own more than 1,000 properties were behind just 0.3% of all U.S. home purchases, based on data from John Burns Research and Consulting. Strip out the second and third quarter of 2020, when COVID lockdowns effectively froze housing transactions, and big investors' home purchasing activity has dropped to its lowest share in 7 years. So, the good news, we can get past the talking point that it is large institutional investors that's driving up the cost of housing, because they're not really buying it anymore.
Right.
Now, what do we see in terms of like where home prices go? Because I don't think it's fair to read this piece, and this is kind of how it's written, which I don't think is clear. I don't think it's fair to read this piece and go, oh, gee, is the value of my home going to drop 10 to 35%? I don't think that is necessarily what this means, even if it's kind of insinuating that. I think part of this is it's very much a regional market still. And if you take a look at the southeastern part of the United States, in particular Florida, where you have inventory levels that are now above pre-pandemic levels, you are seeing home prices falling there throughout basically the entire state. If you take a look at parts of Texas, most notably Austin, where a lot of people moved back right, after 2020 in 21 and 22, you are also seeing prices falling there. There are a number of metros throughout the country that are seeing prices that are meaningfully off of their peaks. Like this is something that is happening in a number of these areas. It's not happening everywhere, but it's definitely happening in a number of different places. If you look at where they are, I have this here in terms of, and this is data from Case-Shiller Home Price Index. Austin, Texas, as I noted, down 13% from its peak in terms of pricing. Punta Gorda down 11%. Cape Coral, Fort Myers down 7.8%. Lake Charles, Louisiana down 6.8%. Sarasota, Bradenton down 4.3%. Ocala down 4.3%. New Orleans down 3.5%. Vero Beach, Florida down 3.3%. Santa Cruz, California down 3.1%. The Villages down 2.9%. And this is as of a couple months ago.
Right.
So I think that the message that I have on this is, look, once inventory recovers back to those pre-pandemic levels, prices can't hold up because there just aren't enough buyers to clear the market at these prices, at these interest rates.
Yeah, not at 7.25%.
And at these home insurance premiums now. That's the other part that you have to remember on this. Home insurance premiums are way up too. So I think once you get back to pre-pandemic levels of inventory, there's absolutely a case that home prices need to fall in order to clear that inventory. How far? I don't really know. It's going to depend on the market and how much prices ran up beforehand. But I think that that's a fair statement. The thing is, it is not something where we are seeing uniform inventory levels on a state-by-state basis. In particular, the Northeast, where our show is based. I know we've got people that listen to us all over the country. But the Northeast, where our show is based, has inventory levels that, for most of it, are anywhere between like 50 and 70% of pre-pandemic levels still.
Except for Connecticut.
Except for Connecticut, which is still in the 20s. Like Connecticut only has a quarter as much inventory right now as pre-pandemic. You're not going to wake up 3 months from now and be like, gee, Connecticut's got all this inventory. Look what's going on with pricing. So,
can somebody in Connecticut tell me what is going on there? I still don't. I know a ton of New Yorkers moved to southern Connecticut during COVID, but that happened all across the country, and the rest of the country has recovered their housing stock. You mentioned these numbers, Chuck, so I'm going to quote from the St. Louis Federal Reserve here in terms of their own data. Across the United States in December, the total active listing count, which would include both multi- and single-family homes, was sitting at 84.3% of December 2019. So right before COVID, compared to today, 84.3% of the homes for sale nationally. Florida, nearly 117%. So a big uptick in inventory there in Florida compared to pre-COVID. Connecticut, 27.6%. So I continue to scratch my head at Connecticut and say I have genuinely no idea what's going on there.
So I do think this is one of the stories for this year that bears watching, because home price, if you look at your big home price indices, the FHFA and Case-Shiller, again, they have these little divergences that pop up, over periods of a couple months or so, but they're now showing that over the last 12 months, and this is data through, I think, November. I don't think we have the December data on it yet. But through November, let me just make sure that that's accurate. Okay, yes, it's through November. And so when you look at No, actually, sorry, it's only through October because it takes a while to compile this stuff. So it's only through October so far. But from October of 23 to October of 24, Case-Shiller 20-City Index is saying home prices went up 4.26% in the U.S. FHFA Housing Price Index saying they went up 4.45. So 4.25 to 4.5. Mm-hmm. That's kind of what you're seeing. I think there's a good chance that this year, because inventories are still expected to build with higher interest rates, and again, Mike and I have talked about the only way that you get rates getting back below 6 is probably with a recession. So you don't really want that because that means nothing good's happening with home prices either. I think there's a reasonable case to be made that you might see pretty close to 0% home price appreciation nationally, even though pockets of the country where inventory is low might continue to move up, single digits in some of those areas. Does that seem reasonable?
It does. Yeah, and it's going to be this big divergence, but it is explainable. It is logical. But you have to just wait and see what happens with mortgage rates too, and that's a tough one to predict.
It is. There's a lot of uncertainty there. And the other piece is, look, when it comes to new construction, remember, there are questions about what's going to happen with new home construction costs as well. A lot of the timber that gets used there is imported. A lot of the other things that go into homes, how much PVC piping gets made in the United States?
Not a lot.
I'm guessing it's not a lot. I'm going to look it up right now just to see where it's mostly made, but it's something where a lot of the stuff that goes into building a home is not necessarily made here. Here we go. Where are the biggest PVC manufacturers in the world by revenue? The number one, Mike, do you know who makes the most PVC piping in the world?
Is it not China?
It is. It's a company called ChemChina.
Yeah.
So they are the biggest PVC manufacturer in the world. Formosa Plastics, based out of Taiwan. DuPont actually is a big one, based in the U.S. But then you've got LG Chemical out of South Korea, Shin-Etsu Chemical out of Tokyo. So out of your top 5, one is in the U.S. You then have a couple other smaller ones that are there, but they're a fraction of the size of the bigger ones. So I think this all is continuing to point to, hey, until we start to get policy certainty as soon as next week, there's a lot that we don't know about 2025 yet, and we're going to have to wait and see how a lot of this stuff plays out, because the potential policy shifts are big enough that they can affect all these things, in my opinion. I know that's kind of a boring answer, but
no, it's reasonable.
It's true. Let's take a quick break here. When we come back, we'll talk a little bit about the MBTA in Massachusetts, what they are saying about how they are going to continue to try to improve service going forward. And also, Massachusetts, remember, you've got the MBTA Act, the MBTA Communities Act, which is requiring more housing to be built in areas served by the MBTA. We'll talk about how one town recently voted in order to try to deal with that.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Phishing scams, ransomware attacks, and identity theft are 3 very common fraudulent schemes that can cause significant damage to your financial well-being. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And as technology continues to evolve, it's even more important for you to know how to protect yourself from being a victim of this kind of serious activity. Our new guide is called 7 Common Financial Frauds and Scams, and it's designed to help you understand ways to uncover potential hacks to your most important accounts. These kind of attacks are becoming more complex, so it's critical that you know what to look for before clicking on an email or answering a number you don't recognize. Call us today at 800-393-4001 and request our new free guide called 7 Common Financial Frauds and Scams. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Preparing for long-term healthcare costs is a critical piece of your retirement plan. According to Genworth, a nursing home stay in New England might reach nearly $200,000 a year in the next 10 years. So if you aren't ready, your savings could be at risk. Cushing & Dolan are experts in elder law, and if you haven't done your planning yet or need a second look at your existing plan, call them today at 866-848-5699. Ask for their new free guide called Long-Term Care Planning for Procrastinators. The guide will help educate you on how to protect your assets from these high costs so you can enjoy your retirement years. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, Mike. So the MBTA, the Massachusetts Bay Transit Authority, they run the trains and the buses in Massachusetts. Most people don't realize that the bus system is actually the workhorse of the MBTA. It carries far more people than the trains, but that's neither here nor there. In any case, it has been pretty badly run organization for quite some time. But when did Philip Eng come on board there? Was it last year or was it a year and a half ago? Yeah, maybe like a year and a half. Somewhere in the last 2 years he came on board. And has a ton of experience in transportation systems and really has made some progress in dealing with one of the biggest problems, which is just the state of immediate disrepair that was causing like all these slow zones throughout the subway system. And they've done a fantastic job cleaning it up to the point where I think their expectation now is that most of the slow zones will be removed, I think all of them, by either late this summer or early this fall.
April of 2023, by the way.
Okay, so so about 2 years ago, closing in on 2 years. And the big thing is that Eng has restored some credibility to the institution, even though he's only been there for a short period of time. Before then, like we were constantly like, okay, they're promising this and it's not going to happen, but it does seem like he's made some progress. The question is going to be, okay, you still have this huge maintenance backlog of things that you need to address. How do you develop a credible plan to do that? And B, Eng is someone who is not the youngest, I think is how I will put it. He is, I believe, Wikipedia has him listed as between age 62 and 63. So he's not going to be there forever. This is not going to be, a 20-year stewardship. It's probably going to be, 5, 6, 7 years is I think, reasonable. How in that time do you build the culture of accountability such that when he does retire or move on to somewhere else, you have people in place that follow the template he's laid out in order to continue the improvement and not just backslide? Those are the two questions that I think are out there.
That said, I think residents seem to be giving him a lot of credit. Did you see his dubbed nickname in December?
No.
Train Daddy Eng.
Ooh, that's good.
Pretty solid.
That's good. I like that.
The calendar has turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th of this year. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
In January of 21, the Massachusetts legislature passed the MBTA Communities Act, and basically what it specifies is for the 177 towns and cities that are served by the MBTA, they have to establish at least one district of, quote, reasonable size where multifamily housing is permitted, and it's based on the size of the town or city as to how much they have to actually end up permitting. Towns that don't permit enough or don't allow for the proper permitting are going to lose funding from the state as a result.
Has that been clear what kind of funding gets lost? I found it rather opaque what the actual punishments were.
Yeah, the general text is, local infrastructure funding, but it could in theory be discretionary local aid as well.
Yeah.
So Needham, which is a town that is, again, I'm just saying this because we have listeners who, might be out of state. Needham's a town that is about 25 minutes from Boston, maybe 20 minutes from Boston, and is, kind of right on the cusp of, I think, where you go from more urban construction with, more multifamily towards more traditional suburban single-family construction.
We're particularly familiar with it because our show is broadcast from the town of Needham. It's serviced by, I believe, 4 commuter rail stations right in the town.
And so they had a vote earlier this week on a proposal that was put into place last year for them to satisfy the MBTA Communities Act. The vote that they had this week effectively said, no, we don't want to follow through with a plan that could potentially permit up to 3,000 additional units of housing, which was about double what was required by the state, even though, again, just because you may be able to permit that, it doesn't mean that you necessarily would.
Yep. So
where does Needham go from here?
So the proposal that was put into place would have allowed zoning for up to 3,296 units. They're only required to do 1,784 units. They have, it looks like, until February to potentially redo it, maybe as late as May from what I'm reading now. I'm a resident, so I've been particularly close to this one as well, and there has been just almost hilarious levels of fighting and anger about all of this. But, it pushed back again, and this, again, it's slightly different because the proposal was to over-comply with the law compared to some other towns that don't even want to comply with the base law, but it still remains a question as to whether or not the town of Needham will even comply with the baseline of the law and then what the punishment would be from the state if they refuse to. So back to the town in terms of what is going to be come up with next.
Still more to come on the Financial Exchange. We're going to do a quick little break here, but Hour 2 is coming up in just a little bit.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned, and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other. and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 here on the Financial Exchange, and after a big move up yesterday, stocks are largely treading water today. The Dow is off 35 points, less than 0.1%. The S&P is up 7 points, about 0.1%. And the NASDAQ is down 4 points, so basically flat. So not a ton of overall movement after all of the fun we got to have yesterday. 10-year Treasury also not moving a ton, but sliding down another 2.6 basis points to 4.267%. According to Mortgage News Daily, The average 30-year fixed mortgage rate nationally dropped from 7.25% to 7.13% yesterday, with interest rates sliding. So that's some good news for the housing market, but still a lot more is needed, I think, in order to get it to where you'd like to see it. Oil down 99 cents a barrel to 79.05 on West Texas Intermediate, but AAA national average for gas prices picking up the fact that, hey, gas prices, or rather oil prices, had risen over the last couple weeks, and so up another 1.4 cents to 3.10 and 0.3 of a cent. Based on how we've seen the correlation here, you're probably heading somewhere into that 3.20 to 3.25 range over the next couple weeks as you see a little bit of catch-up on that side. And then we've got gold up 32.60 an ounce to 27.50 and 40 cents. Mike, today Scott Bessent heads to Capitol Hill to kick off his confirmation hearing. What are the things that we're going to be watching in this hearing? I mean, I'll be 100% honest. I'm not going to watch it because I can't. There's so much grandstanding and everything that happens in these things. But what are we expecting Bessent to say, and what are some of the key points that we'd expect to hear from him?
Well, it's also literally occurring right now, so it'd be tough for you to do both at the same time.
I can multitask.
First and foremost, if you're expecting a repeat of Pete Hegseth's confirmation hearing, then don't. This is going to be considerably more boring. This person is very clearly qualified, and at least I personally have heard no allegations of the types of things that Hegseth was facing. So if they do make a big grandstanding push, which I'm sure there will be some of that in terms of his background coming from the hedge fund industry and such, but I do not expect a whole lot of controversy over this pick. He is immensely qualified to do the job and doesn't really have much that I've seen in the way of controversy in his background.
So I think that this is going to be something where, remember, Bessent has a few key things that he wants to focus on. The first is figuring out a way to get the annual budget deficit down from about 6% today down to about 3% during the course of Trump's term. So if you look at the annual deficit as a percentage of GDP, if you take a look at where we are sitting there right now, the 2023 number, again, it's the last full year that we have the data for right now, was about 6.1%. The year before that, 22, was 5.2%. Remember that the years before that, 2020 was 14%. That was right in the middle of the pandemic, and then 21 was about 11 coming out of it. But if you're talking about targeting a 3% deficit on an annual basis, Mike, do you know what the last year is that we had a deficit below 3%?
2015.
Correct.
Yeah, I'm looking at the data, so I did cheat, but I have the same information ahead of me here. And
let me ask you this: prior to 2015 and 2014, which was also below 3%, what was the last year that we had a below 3% deficit?
I won't actually look at the data here. It would be pre-Great Financial Crisis, so I don't know.
2007.
Yeah.
So the thing that we're working against here is that if you look at the last 16 years of data that we have, 2 of them have had deficits under 3%. 2 out of 16. Now, this encompasses the back 2 years of the Bush administration, 8 years of the Obama administration, 4 years of Trump, and 4 years of Biden. So it's been across, multiple different administrations with multiple different Congresses, and the trend has still been unambiguously in one direction. So Bessent's up against an awful lot of momentum the other way. If you, again, even if you look at the 1990s as an example, I'll just read you off the annual deficits here. I just want to give some context on this, because this is going to be, there's some work that has to be done, especially since the demographics are worse than they were in the 90s, and the big driver of this continues to be Social Security and Medicare. 1990, the deficit was 3.7. 91, 4.3. 92, 4.4. 93, 3.7. 94, 2.7. 95, 2.1. 96, 1.3. 97, 0.2. 98, 99, and 2000, surpluses. 2001, a surplus as well, and then back to deficits. So even in the 90s, until you had kind of that tech bubble at the back end, you still were consistently running north of 3% deficits. for much of the first half of that decade. So I'm just pointing out where we're coming from. I'm not saying it's impossible. I'm just saying this is a big one to try to get back there, and it may or may not be accomplishable within Trump's 4-year term.
Should we fundamentally take this any more seriously than Elon Musk's promise to cut $2 trillion worth of government spending? Because the quote that just showed up on the television from a question posed to Scott Bessent, and his answer was that the U.S. economy faces calamity if taxes go back up. How do you get the deficit down below 3% if you're talking about financial calamity should revenues increase?
The big thing, this is the math. If you don't want to touch Social Security and Medicare, which I'm going to start with that premise because no one wants to touch Social Security and Medicare right now. Second, you start talking about, like, the one thing we just did on Social Security was increase benefits for a subset of people.
Yeah, correct.
So I'm going to start with the premise of don't touch Social Security and Medicare. If you do the math out, in order to get to a 3% deficit, you have to cut all non-defense discretionary spending by about 30%. That's what you have to do.
Mm-hmm.
I'm not saying that's good, bad, or ugly. I'm just saying that's what you have to do. Do we think that's going to happen? I will tell you, Mike, I don't.
I don't, yeah.
I don't. Do I think that maybe you can make some progress around the edges and go from a 6% deficit down to 5%? Sure. Can you even get into the 4s? Maybe. I'm open to possibilities, but there's so much institutional momentum going the other way that until faced with the actual reckoning of, hey, here's the problem and it's immediate and it's right now, I don't know. I'm just kind of I'm inherently skeptical that Congress makes any big changes ever, just because, like, there's a pretty long history of things moving slowly, in particular, for the last 20 years or so.
Is this the man of economic reason coming into? Is this the voice that we point to in the Trump administration of, fundamental reason when it comes to the economy, and when outlandish requests on tariffs get proposed, he's peeling them back, or how much is he on the same page with other Trump advisors when it comes to the economy?
Well, let's talk about this, because the voice of economic reason implies that, hey, tariffs are not reasonable. And I'm going to let them at least try to see how this goes, because Bessent is someone who's on record as saying within the last year that he believes tariffs can be used positively in order to impact trade and boost the U.S. economy in certain areas. So I'm not going to work from the premise that it's unreasonable to move forward with tariffs. I think Bessent probably is the smartest guy in the he's a smart dude. I've talked to a number of people that have worked either with him or adjacent to him and things, and there's whether you're talking to academics or people in the financial industry or even regulators, it's basically, yeah, he's a smart guy who knows his stuff, and you're not going to be able to pull the wool over on him, whether you're talking about anyone that he's dealing with. And so I think the thing that I look at here is he's someone who is eminently qualified, very capable, and I think if there's someone that you do want in this position where you're trying to make large, potentially seismic changes in how the U.S. conducts business, I think he's the guy. I think he is very, very qualified and capable here, and I think we're going to have to, again, just see how he's able to try to balance all these different things that he wants to do. And it's going to be a huge challenge. There is a very narrow path that you can follow and potentially have these things work successfully, in my opinion. But there is a path that you can follow in order to try to get all these things to happen. Whether he can be the one coordinating it and end up doing it, I think that's going to be the question. But he is incredibly qualified for the position, and I think as someone who has the potential to do a fantastic job there, we're just going to have to see how it plays out, because there are so many balls that they are potentially juggling.
Agreed.
Let's take a quick break here. When we return, let's see. We want to talk more about spending and things like that, or do we already kind of cover that?
Move along. How about some Social Security talk?
Yeah, let's talk Social Security after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange. On this day in 1920, Prohibition began across the U.S. Prohibition was widely unsuccessful because it directly led to a rapid rise in crime. Trivia question today. How many years did Prohibition last in the U.S.? Once again, how many years did Prohibition last in the U.S.? Be the sixth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
According to a forecast by the Senior Citizens League, the Social Security cost of living adjustment could drop to 2.1% in 2026. That would be the lowest COLA in 5 years. Another forecast that they have, according to independent Social Security and Medicare analyst Mary Johnson, thinks that it might be as low as 0.06%. Now, Mike, this all basically...
I have a question. Are any of these people better at forecasting inflation than the rest of us?
Well, here's the thing.
Because that's what COLA is.
They're not. And it's, again, that's basically what it's saying is, hey, if inflation's lower, your COLA will be lower. If inflation's higher, it will be higher. But we don't really have the track records of these groups in terms of how well they've predicted them a year out previously.
Yeah, we got a 2.5% bump for 2025. We know that much. For recent Social Security recipients, one fun little bug about all of this that people that were on Social Security in the 2010s decades will let you know about was there was a brief period of time there where the cost of living adjustment was so low because of inflation that there was a few years where it's negative, but there were even years where it was positive. But because Medicare rates went up faster than the increase on Social Security, a lot of recipients received a few years of no increases on Social Security until they finally paid back that Medicare increase that went into effect. And so, look, I know that that's not a fun issue for seniors, but I will take that over 8% inflation any day of the week, and that's what you're talking about when it comes to all of this. But there's been a lot of updates regarding Social Security and a lot of conjecture about future updates. You know, obviously the Social Security Fairness Act just went into place, and so if you worked for a source of income that did not pay into Social Security for a period of time, definitely understand how you're going to be affected there because there's still a lot of confusion on that one. But we actually got an email, Chuck, I think this morning, about Social Security taxation, and maybe we didn't do a good enough job explaining this, but the question was, you guys said Social Security taxes on retirement benefits. Do retirement benefits include pensions, IRAs, and Social Security income? And I want to be rather clear about this. So when you are working, you have Social Security taxes and Medicare taxes coming out of your payroll. Half of it's paid by the employee, half of it's paid by the employer in the way of FICA. FICA does not exist on any of these other income sources in retirement, whether it's pensions, IRAs, or Social Security. So hopefully that clears that piece up. What does exist and has existed since 1983 is income taxes on Social Security benefits. And specifically, that law went into effect in 83, taxing up to 50% of benefits. Now it's been updated to include, for higher income earners, up to 85% of their Social Security benefits would become taxable. And to be clear, the revenue generated from those taxes does go directly into the trust fund. Is there anything I missed on all of that or misdescribed there? Because I know there's still a lot of confusion about how all this works.
No, I mean, I think those are the big items there. Obviously, look, that we've talked about, the Social Security system and its long-term instability, kind of even intermediate-term instability at this point. But that's something where if you're trying to figure out, hey, how are, what's taxable to me today, it's not really a relevant question as to, when does the Social Security Trust Fund run out of money, other than, as you mentioned, hey, the taxes go directly towards trying to replenish the trust fund, and any changes to those taxes would obviously have impacts on the longevity of the trust fund.
This is pretty complex stuff, which I will acknowledge for a moment here, and trying to determine, for instance, will I face more or less taxes in retirement? How do my RMDs affect my taxation of Social Security? What if I want to convert to Roth? Should I pull Social Security early? These are complicated questions that are pretty unique to every individual. If you are facing questions like this and not finding the answers that you need, call us at Armstrong Advisory Group. We work with our clients every day to try and solve these problems. The number's 800-393-4001. You can chat with a real live human being, set up a consultation. Number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The Biden administration early today announcing an executive order on cybersecurity, imposing new standards for companies selling to the U.S. government. What specifically do they want, and why are they doing this now?
I guess they're doing it because they're about to not have the ability to do it. And guess what? We keep getting massive intrusions into our every aspect of our over-the-air lives. What they're specifically doing is passing a set of, or proposing that there exist a set of standards that all vendors to the General Services Administration and the U.S. government would have to adhere to. What those standards would be, nobody seems to know yet. Suffice to say, they're going to be immensely complex and probably take years to have them written because this doesn't even go into effect until 2027.
Yeah, I don't know nearly enough about any of this to be able to speak credibly on it, so I won't even try to.
Going on past experience, I would guess that any standards you set are going to... I think this does need to exist in some way, shape, or form. But I think we also have to acknowledge that the hackers at this pace are moving a lot faster than our regulators seem to be able to keep pace with.
Yeah, it's... By the time you get to 2027, you might have completely different threats than the one you're facing now.
Yeah. And I don't think you should just throw your hands in the air and do nothing about it. That's not what I'm saying, but this is a pretty heavy bar to get over in terms of actually delivering something that's going to be useful.
Taking a look at markets as we head towards the bottom of the hour. Dow is off 11 points. S&P is up 5. NASDAQ is down 25. So mixed, very quiet markets today. No fireworks to this point, at least, in the day. Quick break. When we come back, we got the trivia answer, and we're talking TikTok.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other. and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hi, it's Chuck and Mike from the Armstrong Advisory Group. Our guide this month is the 7 common financial frauds and scams. Mike, one of the ways that fraudsters potentially get your information is through something called a phishing, with a PH, scam. What is a phishing scam?
Yeah, again, a misconception here from a lot of folks. When they think about getting hacked, it's, some cyber criminal that's gaining access through a back door to your information. Usually that's not what happens to companies or individuals. It's usually I fell victim to something that looked legitimate. And so a phishing scam would be when someone posing as somebody else, FedEx or the United States Postal Service is a common one. They send you a text or an email saying, you missed your package delivery, sign in here to get access to it. And you end up actually giving the fraudster your own personal information.
In terms of being vigilant against this, how do people start to protect themselves?
Quite honestly, it's so prevalent these days that my general feeling is that you have to treat every phone call, every text message, every email you receive on a day-to-day basis as though it is a phishing attempt. And until you're able to prove otherwise by calling that person at their note address, by looking up your bank's contact information rather than trusting that it's actually somebody from that bank, you have to assume that it is a fraudster, it is a scammer trying to get access to your information, and be vigilant and suspicious.
Our guide is titled The 7 Common Financial Frauds and Scams, and it details phishing scams and a host of other ones. You can request it by calling 800-393-4001. The guide has information to help you make more informed decisions to protect yourself and can be requested by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025. Trivia question today was, how many years did Prohibition last in the U.S.? That would be 13 years. Didn't realize it was that long. 13 years. Russell from Warwick, Rhode Island is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Russell. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about TikTok. We've got 3 days until the potential ban goes into effect. We still have not heard from the Supreme Court as to the case being heard in front of them last week, correct?
We have not.
I would anticipate that we would in the next 2 days.
Yep.
So there's that lingering out there. But one of the open questions is, hey, if this TikTok ban goes into effect, where do all of the users and the revenue generated by them go?
A lot of it to Meta. A lot of it to YouTube. A lot of it's lost in the short term. But, there's some clear winners here. X maybe to a limited degree, but, Meta is the one to me that has a copycat app of TikTok. So that probably is where a good chunk of it goes. I'm going to toss out a prediction here, and this might be overly safe, but I'm going to say that 60 days from now, TikTok, even if it was temporarily removed, is still in or back in app stores.
It's got that vibe, doesn't it?
It does. I mean, with the rumors going around of Elon Musk making a purchase, there's been pieces published about the estimated value of TikTok were it to face a sale. I don't know. Donald Trump has insinuated that he wants to pass an executive order to rescue it, so it's got that feel to me. I don't know what format it's going to be, who's going to own it, but I just don't really get the sense it's actually going to be banned.
It's kind of disappointing to me.
Well, it'll be disappointing to me if it's not banned and still owned by the Chinese.
Yeah.
It'd be tremendously disappointing to me because there's a heck of a lot of evidence right now that this type of abuse is what the Chinese want to do.
I'll put it this way. So when, I forget exactly when the law was passed that would effectively require TikTok to be banned in the U.S. I think it was it was April or May, somewhere around there. Is that right?
I don't recall, but yeah.
It was last year at some point. And what I remember very clearly is just before it, I don't remember the exact timeline. I don't know if it was like a week before or a month before. There was a closed-door security briefing for members of Congress on TikTok, specifically discussing it. So it was basically like the military and the intelligence community bringing this to them. And no one really said what was said during it because, again, it's a closed-door, confidential, top-secret meeting. But basically immediately after that, this bill ended up passing. And I find that to be notable, and it passed, with bipartisan, majorities in both the House and the Senate, which is kind of hard to do these days. That kind of stuff just doesn't happen very often. And so I find that notable when, hey, whatever was said in that meeting was meaningful enough to get the majority of congresspeople and senators to say, yeah, this is a problem and we need to move on from it. And to less than a year from now, be potentially kind of, wavering on it is bothersome to me. Now, if the wavering is, hey, it's going to end up being owned by, a U.S. company or U.S. citizen, or okay, fine. But, I mean, you've had all this time to get there. Why haven't you done it to this point? So I don't want this to become something where in perpetuity it's, well, we need another 60 days, now we need another 90 days, and we're sitting here 20 years from now man, we really should have gotten rid of TikTok when we had the chance.
Right. And by the way, I keep bringing up, this is not TikTok related, but the successful espionage and hacking operation Salt Typhoon to people, and I keep getting weird looks like, what are you talking about? And I don't know if it's because this broke right in between the Christmas and New Year's holidays and nobody paid attention to it or what, but all reporting indicates that the Chinese for years have been conducting the largest telecom hack in our nation's history. And to look at TikTok as any differently from that is just foolish to me. So if you are listening to me and you don't know what Salt Typhoon is, please go open a computer and read about it, because it is pretty horrifying what was conducted and the type of information that Chinese hackers are likely in possession of now.
Yeah.
So, yeah.
All kinds of stuff. And by the way, it's, again, I just don't know what the justification is for, yes, we want to let a foreign adversary operate a social media network that's accessible to our users.
Right.
Why would you do that?
Yeah. So if anybody changes, and I know there's been suggestions that Donald Trump would, but until he actually does something on that, I'm not going to hold him guilty for rumors around this. But if it does flop, or it does flip their perspective on that, then yeah, there's some serious questions here, because it's pretty abundantly clear the risks that exist on TikTok.
Let's talk a little bit about the Google piece in the Wall Street Journal. Google thinks it has the best AI tech but now it needs more users. Newsflash, if you think you need more users, you're not going to get them.
And if you had the best AI tech, you'd have the users.
Not true. Not true. There are plenty of instances where the best technology does not attract the most users.
True.
I say this as a proud user of Apple's ecosystem.
Yeah, okay, fair enough.
They repeatedly do not have the best phones. They just have very accessible ones, but they're not the best. We could also get into like VHS versus Betamax if we want to go back 40 years or so, but that's going back a little bit. But so Sundar Pichai is like, hey, we want Gemini, which is Google's chatbot, to be used by 500 million people. Well, I want to be 6'5" and playing in the NBA, and unfortunately, not going to get there. And the thing with any of this is if you have to be like, hey, our product's so good, why aren't you using it? You're losing.
Yeah, here's one thing I do suspect. All of these products are starting to charge a fair bit of money for their use. I don't know what the ChatGPT Pro goes for. It's like $20 a month.
$20.
So I would suspect that Google is about to come in and dramatically undercut even the very discounted rates that you're seeing from competitors' products. That's my main guess here, is that if you want to use Google's products, it's going to be pretty close to free for an extended period of time.
It's and part of the reason why I think they're getting towards that, if you look at like the incremental cost for running this stuff, because you don't have to do as much training anymore. So, quick primer on how these work. They're what are called large language models. You basically train them, you give them a data set, and what is called the neural network figures out, okay, if the word the is in here, here are the words that come after the, and here's how I use them, and here's the context. And it basically pieces together. It's like teaching a child language, where it basically pieces together, if I see X, then I could do A, B, or C, and I just need to pick the right ones for the situation. So the premise is you train this on a ton of different language, and then you put it out into the wild, and it'll spit out answers based on the questions that you ask it. What they are starting to find out is that they're running out of training material for these large language models. There's just not much more that you can train them on at this point, and so the cost of doing so and the cost of like all of that background work is coming down dramatically. The other question that then it raises is, okay, if that's the case, that's where like the bulk of the heavy lifting is. Do you need all of these new processors that you are trying to order because you're not doing that? Like you don't have to sort through infinitely more inputs in this and that. But I think ultimately the question that's still out there is, hey, how useful is this stuff going to be? And I raised a question with Mark Fandetti yesterday. I want to ask it to you, Mike, today. So you've got these companies that are not just talking about chatbots anymore, but now the big thing that you're being sold is agents, which the idea of an agent is like an AI that can actually do something for you, not just answer questions that you're putting into it. If in theory agents are so good at doing this stuff, Mike, how come big tech companies aren't cutting their headcount more?
Because they're not that good at doing it.
That's kind of where I land.
Yeah, they would. Trust me, like big tech would love to be the first innovator to say, we're laying off this staff because we don't need them anymore. It's just not good enough. It's not there yet.
And so I'm wondering if AI can be perfectly like good at like certain things, and there's certain stuff that I think it is great at, but I'm just wondering if this iteration is at a point where we're kind of, this is as far as it can go. Now, you've got all of NVIDIA's new chips. They're going to be delivered this year, and so maybe a year and a half from now, we're sitting there and we're like, oh, here's all the stuff that AI can do now that it has all this extra computing power. I'm open to that as a possibility, too.
Sure.
But, hey, if Salesforce is an example, which is pushing these AI agents, is if they're so good at what they can do, why did Mark Benioff say that they want to hire 2,000 more salespeople to help sell AI? Why can't you just
do it?
Boot up 2,000 agents and sell the AI.
Yeah.
So I think that's kind of what I'm wondering on this is, hey, maybe these very much are tools that can enhance productivity, but maybe they're not going to be the employee replacers that have been talked about and promised and feared in a number of cases. Let's take a quick break. When we come back, Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Preparing for long-term healthcare costs is a critical piece of your retirement plan. According to Genworth, a nursing home stay in New England might reach nearly $200,000 a year in the next 10 years. So if you aren't ready, your savings could be at risk. Cushing & Dolan are experts in elder law, and if you haven't done your planning yet or need a second look at your existing plan, call them today at 866-848-5699. Ask for their new free guide called Long-Term Care Planning for Procrastinators. The guide will help educate you on how to protect your assets from these high costs so you can enjoy your retirement years. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, LegalExchangeShow.com, and request it there.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks, but in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston where you can support where you can make a donation and support such programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's DAV5K.Boston.
Mike, what do you got for me for Stack Roulette?
I want to talk about the complexities of price gouging. We talked a lot about price gouging last year during the presidential run when Kamala Harris talked a fair bit about it when it came to groceries, and we generally described it as not really price gouging. In California right now, we're seeing some things that I think would be more adequately described as price gouging. One family, Joe Thompson's family, after their home burned down, was looking for a place for their family to live. They found a 5-bedroom home in Santa Monica that had been put on the market the day before for $28,000 a month. That's more than double the rent that was posted a year ago. And seems like a more accurate description of price gouging. There are laws in place in California to prevent that sort of thing. But I do go back to kind of a complicated question. Let's say you are the owner of an apartment that is for rent right now, or a single-family home that's for rent right now for $10,000 a month.
Yes.
And you get 30 calls from people asking to rent that place, bidding up the price. What is the moral answer to that? No, I'm just going to take the first person that called me at the price that I asked for, I suppose?
Yes.
Yeah.
Not even the first. Like, again, you might say, okay, that person has bad credit or whatever, but like the first qualified person at the asking price, is who you take. Otherwise, you're effectively being pretty generally not a good human.
Yeah, but again, I like see where that's
you're giving yourself a windfall based on someone else's misfortune.
You are, and I can see why people would be doing it. Like, oh man, this other guy offered me twice what this person's offering. But that is price gouging, and it doesn't matter if you're a large or small business. But we certainly wouldn't deem it acceptable if you walked into a supermarket and they said, "Hey, we're raffling off, or no, we're auctioning off water to the highest bidder here." That's price gouging too, as it is with trying to rent an apartment for twice what you listed it a year ago.
Well, no, and if there's like a regular auction for whatever, it's not price gouging. Like, it's just an auction-based system. But if you have something that's listed at a certain price and a disaster happens, and you say, well, I'm going to use this to make more, whether through raising your listing price or through accepting a much higher bid when you're getting a ton of others because there's obviously a disaster going on, that's price gouging.
Yep.
Like, to use the water example, let's say that you are in a hurricane-affected area and there's no water that's drinkable, and so everyone's buying bottled water. If you're at a gas station, you've got the last thing of bottled water for sale, and it's normally been going for $1.99, and some guy picks it up, and the guy behind him says, "I'll give you $100 for that." Would anyone look at that and be like, "Yeah, I should take that $100"?
No.
No, like that's wrong. That's immoral and unethical, and you should not be doing that.
And it's also completely different from what drove up grocery prices over the last 3 years.
Yes.
So,
correct.
Price gouging is one of those weird things where you know it when you see it, and you're seeing some of it in California right now.
Yeah, I think it's very clear, and I hope that the people who are participating in the price gouging have those extra profits taken from them and given back to the people that lost their homes and maybe shouldn't have, the extra money taken from them because they need a place to live right now.
Agreed.
My goodness. I'm going to talk about this piece in the New York Times. It's a good time to be making mocktails.
You mean juice?
Mocktails.
Okay.
It sounds more adult when you say that. When you say juice,
you sound like a 3-year-old.
Which is fine.
Yeah.
But in any case, it's talking about, hey, you've got this new Surgeon General warning about, considered about the fact that alcohol, can cause cancer, which, again, for anyone who has been drinking for any extended period of time, you know this already and still decide to. I would find it hard to believe that many individuals do not know that who are, drinkers. But I guess what I come back to is the first premise of this, which is that this Surgeon General warning is going to somehow shift behavior. And I just don't know that I buy that.
I think around the edges it might. There's a lot of stupid people that you forget about. Depends what they do, too. When it comes to things like this, they've shown at length that images of, for instance, skulls and crossbones and all sorts of things do a much better job of dissuading people from consumption compared to just a text warning. So I obviously think it depends what format you take, but there's probably some idiot out there that doesn't know that drinking a lot is going to cause them cancer.
So here's the counterpoint to that. One of the fastest growing new bottled waters on the planet in the last couple of years is called Liquid Death and features skulls all over it.
True. Good point.
I don't know what to make of any of this. I don't know what to make of it. But humans are complicated. Film at 11. Let's take a quick break here for the rest of the day. We are back at it tomorrow to finish up the week. We'll see you Friday.